everyone, K-Kim here, and thanks for tuning in again. Today I'm going to talk about why I believe that there will be a 5-year bull run on the stock market and there will be no market crash. And obviously I've done more intensive and extensive analysis on this issue that the market is not going to crash. So if you haven't seen that video, you can go to either my YouTube channel at 2KKim or my blog, 5 reasons why I think the market is not going to crash. I've done some long-term analysis based upon price action and tangible data, not emotions, not feelings, not impulsive thoughts, or just because every single YouTube people is calling that there will be market crash and I'm just gonna going with it. It's interesting to note that I'm like the only one saying the market is not going to crash on YouTube, and everybody else is calling the market crash. And you know what? Nobody knows the outcome. I just give you that. Nobody knows the outcome. Nobody has a crystal ball. Nobody's God in stock market. But I'll tell you this, the market fools the majority. When the majority is in certain direction, market tends to fool majority. And this is a reason why most people lose money in the stock market. And so there are so many angry people. You know, it's interesting. You would think that if I do a video with something like, which is a positive, don't we not want to see market not crashing? Don't we want to see market being healthy, continue higher? Because nobody wants to see a recession. Nobody wants to see people losing jobs. Nobody wants to see companies fall. Yet, so many people are hoping. Just hoping, that's the word, hoping that they want to see market crash because there's so many people have shouting things out on different social medias, especially on YouTube. If you just Google or YouTube search stock market crash, there's tons of videos, even from the people that possibly well known or prominent. How do they know, right? I'm going to just flat out tell you that nobody knows. I do not know. What I present to you in these videos is simply a tangible data that is at hand, what we call price action, right? So there are probabilities. That's all we have when we analyze a stock market. Obviously, the way I analyze the market is a technical analysis, and there are people going to use fundamental analysis. And you know what though? This market has been moving higher on a bad fundamentals. Don't you guys understand that? Back in 2011, people came out calling this whole thing is going to collapse. Back in 2011, back in 2012, somebody came out. I was trading that time. I know this. People go back on YouTube and just Google search 2011 stock market crash, 2012 stock market crash, 2013 stock market crash, 2014 stock market crash. It's not that people are just coming out saying this now. They've been saying this whole rally. But the price action, right, continues to cultivate higher lows and higher highs and respect that primary term uptrend. So what we're going to talk about is why I think there will be a 5-year bull run is coming on the stock market. And I'm not going to talk to you about it because I feel like, saying it, or I just want to shout things out so I can get attention, or I want to say something provocative so I can get more views or more subscribers. Let me tell you something. I don't need your views. I don't need your subscribes. I don't need your follows. So if you don't hear me, just don't follow me, blog me. I don't need it. I don't need your views. There are people maybe need your views and subscribes to possibly grow their business and whatnot. I'm a business. I have another successful business. I trade the stock market profitably, and I don't need anything from you guys, just to let you know, other than the fact that I want to share this with you first because I have a just fascinating passion for technical analysis, and I love sharing it. It's just in my brain. I just got to bring it out. Two, if I can help the community out, right? Because obviously the big players don't want to help anybody out. If I can help somebody out, then maybe that's a good thing. Maybe that's a good thing to do, to help someone out in my expertise. Because that's what we're supposed to do here, right? We all have a strength and weakness, and we're supposed to help each other out. But anyway, so enough of that there's a little rent there, a little talk there, but enough to let's go right into it. I have 4 charts I want to share with you, right? First of all, I want to go back to here. I want to share, let's see, which one should I go first? Let's talk about the sentiment of the market, okay? This is S&P 500 daily chart. This is a current issue. Daily chart of S&P 500, you can see we're 2015, 2016. It's about a year and a half worth of data here on the daily chart, meaning we have each candle represents 1 day worth of data. Obviously, you know, this right here, the blue moving average, that's what we call, that's a 100-day moving average, right? 100-day moving, simple moving average. The pink you're seeing is 200-day moving average, 200-day simple moving average. So first of all, what we have to understand is the market has been in moving sideways market. We're not in a downtrend, guys. This is something that I've been harping on for since mid 2015 early. We're not in a downtrend. We're in a sideways market, especially when you're dealing with the bull market since 2008 crash. It's a normal thing for the market to kind of continue, you know, kind of stays in this kind of a consolidation stage. You know what I'm saying? The sideways market possibly before going higher. But again, so we're gonna study sentiment here. So obviously we're moving sideways. These arrows, what we're seeing, these are supports, right? So buyers coming in protect this level as a support, meaning that the, you know, when the price comes down, you see the buyers coming in buying it up. Why? Because, you know, they think that, you know, this is a level that they could find some value. They could find, you know, this is why support and resistance work, because people who bought it here and here, they were able to profit. So when they come, because not everybody, you know, this is technical analysis does not work just because everybody's looking at these lines, everybody's drawing support and, you know, resistance, or everybody's looking at these, you know, golden crosses or these moving averages or oscillators. No, technical analysis works because it analyzes, ascertains traders and investors' behavior and this psychological behavior. Psychological behavior meaning that, you know, back in, you know, 2014 April, people who bought it here, they were happy because they bought it there and they made money. They remember it. It's a sentimental thing. They remember this, and so when the price action comes back down, they buy it again. People who shorted here, they got burned, so they remember it. So next time when the price action comes down, instead of shorting, what they do is they switch team and buy it, and that's why these support levels continues to work. We have to give benefit of doubt to the buyers as long as we see the buyers coming in these support levels. Anyway, so. But the main point about this chart is the fact that we have the golden cross, 200 and 200 SMA. And I don't have time to do this right now, but go back and study every single market crash in history, okay? Where after we have a dead cross occurred. So the first thing, you know, once you have 100 and 200 SMA, see a dead cross, this is what I mean, dead cross, right? Because we crossed to the downside, so that's a bearish cross. And if you study 2008 crash and 2000 crash, this thing continues lower. These 200 SMA, 100 SMA continues lower, like a waterfall. Instead, what happens is markets start to move sideways, and so we get into this kind of a consolidation, sideways movement, which is not in a that's not a bearish market. That's not a bearish action. It's a sideways action, especially when you're dealing with this long-term, prolonged uptrend since 2008. These kind of action can be healthy, where it can be a kind of a resting period before market continues higher. Again, these 100, 200 SMA is important because even big fund managers watch. They may not look at every single technical tools, but they will look at these moving averages. So once you see, you know, 100, 200 SMA crossing to the downside, that's a huge warning signal. But when they cross back up, again, go back to every single, you know, go back to history and analyze when the 200 SMA, 100 SMA crosses back up after crossing it back down like this. This is dead cross, golden cross. When this happens, see how many times there was any kind of crash. None. No, does that mean that it's 100% guaranteed that this thing is not going to crash? No. This is a market. This is life. Anything can happen. Can you guarantee me that you will be 100%, you know, guaranteed that you will be alive this week? No, you cannot. I mean, you have a very high probability that you will probably going to live this week based upon the past data of yourself, correct? But you cannot guarantee me that you will not die this week because anything can happen. That's the idea here in the market. I'm not saying there's 100% guaranteed the market because the market could crash anytime, any moment. But for the fact that we have this signal, there's a huge, great chance that market could continue higher. Okay, do your own homework. Go back and do this. When the market gets 100 and 200 SMA, gets down to the downside and then flips back up. If you ever see market crashing or seeing another correction, it does not. You do not see that ever happening. Go back and see it and look for yourself. Again, when the market crash happens, they usually see a waterfall in lower highs and lower lows. And we talked about it on my previous video, 5 reasons why we're not going to see a market crash. But you know what? Let's do a little bit of a comparison here to 1994. This is 1994 chart here and 1993, 1994. About a month and a half, year and a half type, year and a half action. Very, very similar to today. Okay. First of all, you can see that the sentiment of this market back in 1993 and 1994 is very, very similar to 2015 and 2016 today. Here, just look at this chart and then look at this chart. Do you see similarity there? It's not exactly the same, but it's similar. You know what else is similar? Before we started moving sideways in 1993, 1994, we had about 6 years of bullish run. Exactly like what we're at today. Before we started moving sideways in 2015, 2016, we saw about 6 years of bullish run since 2008. So sentiment is very, very similar. So let's study 1993 and 1994 here. We saw that cross right here. Okay, that's a warning signal for sure. And then markets really saw a lot of volatility. It started really zigzagging, it started coming back down to the support levels, as you can see. And so this is where I could see back in 1993. I mean, obviously I was like, very young back then, in elementary school. But back in 1993, 1994, I could hear. If there was YouTube, if there was social media, people saying all kinds of shenanigans, right? But again, price action is true. I've been telling, this is something that I've been harping on, I've been preaching on. Is everyone lies, people lie, feelings lie, emotions lie, everybody's agenda, everybody's greedy, everybody's fearful, everybody do anything just so they can ease their conscience, ease their emotions. That's why we have to ascertain. We have to study the price action because price action does not lie. Everyone lies, but price action does not lie. Anyway, so we saw that cross right here, and it flips back. It flips back, and we saw the golden cross. The thing about the 1993 and 1994 is that it's much worse climate because we actually have a lower highs. Meaning this downtrend resistance is pretty strong. But today, it's a little bit different story. You can see we had that downtrend, but we started cultivating higher highs. You see. So we have more slightly bullish environment today for the fact that we cleared this downtrend resistance and we also even cleared this horizontal resistance today. This is today's chart. Let's go back to 1994 here. You can see 1994, this look bit more bearish for that we're continue to cultivate lower highs there after even golden cross. So what happened in 1994 and 1993? Well, let's see what happened after it formed these signals and after it had that golden cross, right? This is what happened. Okay, this is a 1988, 87, all the way to 1990. Remember, 6 years of bullish run. Okay. And this is what we've been talking about, 1994, 1995. We had that bearish dead cross somewhere about here with a bullish golden cross on 100 and 200 SMA. And look what happened in 1995 to 2000. 5-year bullish run. I mean, we saw corrections in between. That's normal. That's what market does. Market does not go straight up. It creates higher lows and higher highs. That's an uptrend. Primary term uptrend. We continues on until 2000 and we finally saw the crash. And then we went to 2008, got up back up to 2008 and then crashed again and then we're at 2016, right? Also keep in mind, again, this is a Black Monday right here, right? So this was a 1987 Black Monday. Keep in mind that we had primary term uptrend still effective, still valid. You know what valid meaning? You know what Dow theory suggests? The trend is assumed to be in effect, to be valid until it gives us a clear signal, clear, right? That's the keyword. Charles Dow, study that guy. Clears, he's the guy who created, he's him and his buddy. Charles Dow and Edward Jones is the guy who put the Dow Jones Industrial Average together back in late 1800s, early 1900s, okay? It's very, very important. Trend is assumed to be in effect or valid until it gives us a clear signal that has been reversed. We have volatility, we had a sideways market, we had concerning signals, yes, but we did not have a clear signal that it has been reversed. We, in fact, had this primary term uptrend still respecting. So we had to what? Give benefit of doubt to the buyers. And once this thing broke out for another 5 years run. So let's look at that today. This is today, right? 2016. Remember 2008 financial crisis came down 2009 with a 6-year bull run. Isn't that interesting? 1987, right? Black Monday, right? 6-year bull run and start moving sideways. 2008 financial crisis, 6-year bull run and start moving sideways. But what's important here? What is important here? Primary term uptrend support is still getting respected. So what? Trend is assumed to be in effect or valid until it gives us a clear signal that it has been reversed. We do not have a clear signal as of today, guys. Just stop with the nonsense. Stop with these just stupid allegations just because you think this gone up too much that it must do this. No, it doesn't have to. It doesn't have to. Look at this thing. Since 1987, did you know that after Black Monday, everybody got so scared that we're gonna see such a huge, majority people, they missed out on this move because they're calling the crash. Just because we had such a good run for about 6 years doesn't mean it has to do this. It can even go much, much higher, like a crazy run. That's the market. So we have almost similar sentiment here. 6 years of bullish run, primary term uptrend is respected, and I am thinking that 5 years bullish run is expected. Actually, if you do analysis on Russell 2000, 1994 versus current event, there could be about 10 years run expected on S&P 500. I might do that video next time, but I want to keep it. I'm going to stay on the S&P 500 here. So let's go back. Death cross, golden cross, 1994. Today, death cross, golden cross, 100 and 200 SMA. And this is not the only evidence that I have. Again, go back to the video, 5 reasons why market is not to crash. There are other evidences. This is just some new evidence that I come across, and I want to share this with you. And I have to say this again. Did I just say that I guarantee that the market is gonna do this? Did I guarantee you that it's 100% proof? Some guys, some stupid people on YouTube saying that the dollar is gonna collapse. 100% proof on May 28, 2016. It never did. Peter Schiff or something, some guy supposed to be well known, he made the video, and some governor of some state started making this YouTube, these edge saying that he's 100% guaranteeing that May 28, 2016, the dollar is going to collapse. The dollar hasn't collapsed. It's June 21st. And then they're coming out with a new video saying that June or September 28, it's going to collapse. I mean, do you really want to listen to these guys just because they're on TV? They're manipulating. They want some data. There's a hidden agenda. I mean, if anybody coming to you and saying that they know down to a date that what's going to happen in the market, are you stupid? Seriously, you really want to believe them? Did I tell you that I 100% proof that this is going to happen? No, I just gave you a data. I just gave you past historical data that supports the idea that we have a high probability that the market could go higher. I'm not God. I cannot guarantee that I'll be alive this week. But what I can say is this, based upon my past historical data, I'm pretty sure, I have a high probability that I'll be alive this week. But I cannot guarantee it, because something could happen. That's how you approach the market. Stop listening to junk people, and if you do not agree with what I'm saying, just simply unfollow. But if you think that this is a legit analysis, if you think that this is some solid analysis based upon the price action and the tangible data, when I say tangible data, do you know what I'm saying? What I'm saying is I'm not guessing that this is going to happen. I'm working with the data is already there. Let's say if this thing starts doing this, and then I'm saying that's what's going to happen. Then I'm working with the ghost data. I'm working with this data because data has proven that we're respecting this level. And then I am, comparing this to 1993, 1994 action. And not only that, I have other evidences that I shared in this video and putting all this together like an FBI agent or CSI guy. I'm trying to find out the outcome. I'm gathering the evidences with the tangible data. Again, like I was watching CSI like a long time ago, and then this guy just kind of presuming upon this scenario and say, well, hey, I think this and this, I think this happened here. And this brilliant cop, he's a main character, he's like, can you substantiate that? Can you substantiate that? Do you know what that means? Can you confirm that? Do you have any kind of proof? Everyone who's calling out things about the market crashing is a conjecture. There's no evidence. Trend is assumed to be in effect until it gives us a clear signal that it has been reversed. We do not have a clear signal that it has been reversed, do we? No, we don't. In fact, we have this primary terminal trend still in progress. Okay? Can you substantiate this? When people calling all kinds of shenanigans without the proof, you always ask yourself, can they substantiate that? They can't. I'll tell you what, if the price action started coming down and then started retesting this level, and then you're seeing these old supports becoming a new resistance, is start rolling over, and then we have a cultivation of a lower high, I'll say that the market crash might be coming. Because we have evidence then. There is a tangible data then. Do you see what I'm saying? As of today, we don't have tangible data. So given the fact, given these datas that I've presented to you today with these technical data, it's a tangible data, not a ghost data. I'm not anticipating that these kind of data is gonna come, or I'm not saying that we're going to see 100, 200 SMA is gonna cross. I'm not saying that it's going to happen. I'm saying that it already crossed. I'm not saying that these support levels is going to be respected. I'm saying that it already has respected. I'm not saying that this resistance level on S&P 500 is going to be broken. I'm saying that it has already broken. Do you understand what I'm saying here? And I'm not like, when I say this, I'm not like looking down on you or anything. I'm not saying it in a condescending way. Is that I just want to wake the people up. I just want them to understand the value, the beauty that you have at, technical analysis. Because obviously the information, insider information, you do not have. All the rich central bankers, these huge players, they have all the fast information. If any news hits the internet or Twitter or YouTube, it's too late for you. This is the reason why fundamental analysis works if you want to forecast the next 10, 20 years, but fundamental analysis does not work for current affairs. It does not work for the next couple of years, 3 years. It doesn't. Especially, it doesn't work with the how it's behaving currently, or how it's behaving this year, last year. You guys understand? And I'm not saying, you know, that's why I keep using the word like a tangible data. I'm not saying that, you know, and what I'm not saying is, you see in 1995, we saw this happening. After moving sideways, we saw a lot of concerning signal. I'm not saying that it's just, you know, bet your farm, because it's 100% proof that this is going to be happening. Take a second mortgage out, you know, go to the bank and take loan out, put all your savings, retirement 401k in the stock market and just ride it, because that's 100% guarantee it's going to happen. That's not what I'm saying. There's always risk in the market. So you guys gotta be reasonable. You guys gotta be sharp and sophisticated and ask questions, and always ask questions, just like that smart FBI agent. Can you substantiate that? All right? Can you substantiate that? I've given you the data that substantiates the probability of this market possible. And again, there's other videos that I've done. There's other evidences. So that's what I have for you guys. And so hopefully, you know, this video will be helpful to you. And obviously, you know, we want to see the market making new all-time highs. Obviously, we haven't seen that, and that will be a kind of a good confirmation. Next confirmation we want to see is, you know, market, you know, printing new all-time high and getting above these highs. Yeah, so we are still waiting to see a full confirmation, but evidences are building, and I feel that we're going to see. You know, market has been resilient. You know, we've been seeing the market bouncing in the short term and things like that. So, I mean, obviously we'll have to continue to watch, and so we'll do that. But maybe I'll come back to you in a month or so. But in the meantime, again, you can always questions. I will not be answering any questions through YouTube. But if you can just go to the comment section below, or the link there. I put a link to my blog, to this post. And if you have questions, legitimate questions, not stupid questions like what are you smoking or something like that. But you have a legitimate question about technical analysis, then feel free to ask in my blog, and I'll answer. I'll reply to you, but I will not answer any questions. But you feel free to say anything, whatever you want on YouTube, and other people will be very, very entertained by this. Seems like that's what people do. But anyway, so let's see how the market plays out. But I think 5-year bull run is coming. At least high probability that we're gonna see that, and I don't think the market crash is gonna happen. At least with the data is at hand, that there's a high probability the market is gonna shake this off and then possibly continue higher to the upside, and that it's gonna shake everybody. I think it's gonna just make everybody dumbfounded. All the market crash theorists, everybody else. I mean, they're already angry. They're already very, very cranky right now. Because for the fact that they've been losing a lot of money because they probably bet farm to short this market, and I'm just unprofessionalism we're seeing in the traders invest in this age. I'm very disappointed. Just some of the comments just go to my other I have this 9,000 view. Almost getting to 10,000 view video. I mean, just some of the comments, just vulgar comments. It's very, very unprofessional, and just very disappointed to some of the trade. And some of those people obviously just they're just trading in their parents' basement with $10,000 account. Probably those people are probably just really angry. But anyway, I'm not trying to knock anybody out or anything like that. I'm sure they're out there, legitimate, respectful traders who understand the probability that this game is no joke. This game's a serious game. It's brutal out there, and nobody knows the 100% outcome of 100%. Nobody can call things 100%, but all we have a probability, and I'm simply just giving you those data with the probability that supports the data. So have a great time, and I'll talk to you guys next time.